Well, welcome back. Okay, we are on countdown mode. We are 4 minutes away from the February jobs report. Expectations call for a gain in jobs of 59,000 non-farm payrolls, and the unemployment rate holding steady at 4.3%. Let's check markets going into this number. Dow Industrials right now down 257 points. NASDAQ, S&P 500 also weak this morning. I want to bring in our all-star jobs panel. Piper Sandler's chief global economist Nancy Lazar is here. Job Creators Network CEO Alfredo Ortiz is here. Storch Advisors CEO Jerry Storch is here. And former White House Council of Economic Advisors acting chairman Tomas Philipson is here. Also with us, of course, is Cheryl Casoni, who will be breaking the numbers shortly, and Mohammed El Arian. Thanks, everybody, for being here. And Nancy, I want to kick things off with you because you have been talking and telling clients for a long time about a productivity boom underway in America. This was one of your most important issues with regard to the economy. And I spoke with the IMF director, Kristalina Georgieva, recently, and she said the same thing. Tell us about that productivity boom underway, Nancy.
No, it's really exciting. It's through productivity you improve profitability. It's how you create jobs. And it's not just an AI boost to productivity. This actually started mid-last cycle because capital spending started to improve mid-last cycle. And you started to already see healing in the labor market with goods-producing jobs as a result of the capital spending. So productivity is how you raise living standards. It's how you raise real incomes. That's why I'm so excited about it. This bifurcated economy has been an issue. We think we're slowly chipping away at that as you bring factories back, as you create more goods producing jobs, as you improve profitability through productivity. And I recently, last week, we looked at a chart of productivity outside of the United States. I mean, no one can really compare. No one has the investment cycles that we did. Our productivity, again, has been rising really since 2015. And it's been clearly increasing sharply, excuse me, over the past 5 years. Outside of the United States, productivity is flat. And so there certainly has been some increased interest in investing outside of the United States. People are diversifying, but at the end of the day, and right now is a good example, when there is turmoil, where do people come? They come back to the United States because we have the strongest backbone.
Yeah, and that is exactly what Kristalina Georgieva from the IMF said, Nancy, that nobody can even compare to the United States when you're talking about productivity. A word on the consumer, because yesterday I spoke with the CEO of the IRS, obviously Frank Bisignano, the Social Security Administrator, and he said that people on average are going to see a tax refund check this upcoming April 15th of almost $4,000. Can you believe this? $3,800 is the average, which is what Frank Bisignano, who's running the IRS, told me yesterday. Nancy, how much more of an impact from the big, beautiful bill should we expect in the coming months?
So it's not just the tax refunds. Tax refunds right now are an important buffer to the consumer for what's going on with oil and gasoline prices. Our daily consumer confidence survey really hasn't gone down despite the turmoil that we've seen, at least so far this week. And I think one of the reasons is because of these tax refunds. And as we go through March, tax refunds are going to increase significantly compared to a year ago, as you indeed reflect the One Big Beautiful Act's impact on withholding taxes, which people did adjust last year. So you're going to see a real big increase in tax refunds as you go through March and into April. And at the same time, though, it's also the job market. I know, we're going to get new news. Well, I'm not sure it's new news. I know we're going to get news in a minute on the labor market. But look at unemployment claims. I mean, they are incredibly low, highlighting that companies aren't firing. And we do think incrementally that people are starting to hire, reflecting what's going on with corporate profits and also business confidence in a rising trend.
Yeah, really, really important points all around. And by the way, you've also talked about retail sales. We're going to get retail sales in a second. So, Gerald Storch, I'm going to be coming to you momentarily on that. Don't forget, we had massive winter storms in February, so that may very well have impacted the retail sales number as well, making that noisy as well. Cheryl Casoni with the numbers. Go ahead, Cheryl.
All right, here we go. So we have a negative number for February non-farm payrolls, a loss of 92,000 jobs. You can see the market reacting. We are also seeing the unemployment rate tick up to 4.4%. A loss of factory jobs of 12,000. Government jobs, a loss of 6,000. Private sector jobs, a loss of 86,000. Average hourly earnings up 3.8%, which is better than expected. But obviously the headline here is what we're seeing within the report. We also got a negative read on January retail sales, 0.2% to the downside. But I do want to say again, it is the jobs report. We're also seeing here again the U6, the unemployment rate, that came in at 7.9%. Labor force participation, 62%. Again, all of these numbers, to be clear here, are the opposite of the estimates that we got. Let me get into the report to give you exactly where the government says that these massive job losses are actually happening. Sticky report, messy report, and I'm going to be looking for revisions here in a moment. Employment and health care decreased, according to the government, reflecting strike activity, which is what Mohammed said to you moments ago, Maria. Employment and information and federal government continue to trend to the downside, according to the federal government. So again, Maria, this report, these numbers are certainly not the expectations whatsoever. A loss of 92,000 jobs. The Street, again, was looking for a gain of 59,000 jobs. And this also flies in the face of the ADP numbers that we got on Wednesday, where we saw actually hiring in the private sector, construction, education, and healthcare. I think sticky is a very key word here and a very noisy report, Maria.
Yeah, and you know what? Look, we've been talking about AI efficiencies, and that has to be considered here, Gerald Storch, because, look, a week ago we heard from Block, right, and they're going to cut 40% of their workforce because they have AI tools that are replacing people. Oracle, the cloud unit, says it's putting a pause on hiring. How much of that is a factor here? And, Gerald, what are your assessments of these jobs numbers? A negative 92,000 versus an estimate of a growth in jobs of 59,000, Gerald.
Yeah, obviously, that's a poor report. It's not what was expected, so it's disappointing to see that. I would say these numbers, as we know, bounce around a lot. There was an interesting article in the New York Times this morning talking about that. I thought they did a good job on that, that you can't just look at any one month and decide, what's going to happen or what is happening. We had a great report last month, for example. As far as the AI job loss is concerned, I have absolutely zero concern that that is a long-term issue. AI will increase productivity and drive job growth. There is no doubt in my mind AI is a good thing. Now, you can have periods of time, though. There could be a timing issue where you lose some jobs up front and get a ton more back later on as AI-focused businesses thrive. So I'm not worried about that. Certainly that could be a factor in what we're seeing here, as can the major storms that we had, the strike at Kaiser Permanente, all kinds of things. So I wouldn't panic over these numbers, but they're not that good. As for the retail sales numbers, though, I want to point out that even though people are going to say, oh, those weren't what expected, it was still up 3.2% year over year in January. And January is always a messy month in retailing because that's when you clear everything out. But that's a pretty good number, 3% growth year over year, much faster than the rate of inflation, for example. So the consumer still seems fundamentally strong.
Yeah, the consumer feels fundamentally strong, and the backdrop still feels fundamentally strong, Nancy. You've written about this. We were all expecting jobs would come under pressure in the near term, but when you look at the backdrop in terms of the fundamental economic story here, your assessment?
No, we were expecting the labor market to gradually heal coming out of a slump. It's not unusual to have a slow upturn in the labor market. But again, the conditions were right for healthier job growth. As I mentioned, corporate profits, both S&P 500 and now, importantly, S&P 600 earnings were improving. Small business confidence has been in an improving trend, although it may have dipped a little bit in February. And 80% of the jobs come in the SMID space. And so that broadening out in earnings is really, really important to the labor market. And on AI and tech in general, I mean, those companies, a lot of those companies overhired during the COVID crisis, and now what you're seeing is hiring kind of come back to norm. So again, they don't net really create jobs in the economy. The Mag 8 or these big tech companies, it really is the SMID space, and that's where you're really starting to see the green shoots. And that's why is that? Because of the incentive to do capital spending, and you see a pretty sharp drop in effective corporate tax rates with those incentives to do capex, and also tax refunds are positive for the small business community. So a gradual improvement. This reminds me of a year ago in April. Again, it's where you have a temporary shock to the economy. I would argue the backbone of the economy today, supports for the economy today, both monetary, fiscal, are stronger today than they were in April of 2025 as we went through the initial tariff hit. And so we would say, ride out this little bit of a soft patch that we're potentially going to see in the economy. But net as we move through the year, as happened last year, we think growth will again surprise on the upside.
Well, it's a great point to make, because if you bought stocks on April 2nd of last year on so-called Liberation Day about the tariffs, you are up huge. When you look at some of those tech names, you have made a lot of money. Cheryl, I know that you've got revisions right now as well, right?
Revisions just crossed, and for December, there was a revision to the downside of 65,000. But for January, I think this is important. The revision was only 4,000 down for the month of January. Remember that January report was that blockbuster report that blew the street away. Non-farm coming in at 130,000, private 172,000. And I just want to go back to the point that I saw in particular, because I really dug through ADP. The private sector hiring is still strong. Maybe you've got some sluggishness in this report. Maybe there's some sluggishness in the job market, but overall you have a stable job market. And I think that's why you don't see the market reacting as it did initially when these numbers first crossed. We're coming back. I think that's very key. Christopher Waller's out making comments this morning about a stable job market. I think that's very important to point out as well.
Well, I mean, look, there's a silver lining here when it comes to the Federal Reserve, isn't there, Tomas? I mean, if you've got a situation where worries are increasing over jobs, does that trigger the Federal Reserve to cut rates 3 times this year?
Yeah, I hope so. I mean, I would take these things with a caution. I mean, we have trouble forecasting these things before the numbers come out. Now, with all the problems at BLS, we have problems forecasting them after the numbers come out, essentially. And I would say there's a lot of other measures that you should pay attention to. The services numbers that came out yesterday, where 14 out of 18 sectors saw improvement, including employment. That's 75 to 80% of the economy. It's hard to reconcile a trouble with the economy when the services sector is reporting such a strong growth. On the Fed, I mean, that's why part of the reason we're having this stagflation trade in markets where both bond and stock prices are coming down, because they're partly, obviously, it's the oil prices that are coming up that are reducing bond prices, but also people weren't expecting the Fed to cut, which I think is misguided by the Fed, because if you have higher oil prices, that's a bad, sluggish economy. They should be cutting.
And most economists today and analysts on Wall Street are expecting at least 2 cuts from the Fed this year. As you know, the president officially nominated just the other day. He made it official that he was nominating Kevin Warsh for the chairman of the Federal Reserve. I would expect that Kevin Warsh is going to be having one-on-one meetings with people from the Senate Banking Committee, and then I am expecting the hearing and the confirmation hearing for Kevin Warsh to be sometime in March. You still have Tom Tillis pushing back, but once he's in place and everyone's expecting him to be confirmed, we will likely see rate cuts. Alfredo, Nancy, I'm coming back to you once more before you have to go. But Alfredo, where are the jobs right now?
Yeah, well, right now, first of all, we weren't necessarily surprised, or I'm not surprised with the number. Disappointing, of course, but I think with the winter storms that hit, I expected some decline in retail and construction as well. But really quickly, Maria, if I could address the productivity communications here and stuff that we're talking about on AI. I actually just spoke as an example of small business. I think that's going to be the big story, is productivity and AI. I spoke to a small business who is they're the leaders. It's called in New Jersey. Overall, Control Point Associates, and they are using productivity as an example. In one office, they were able to double their revenues in 2 years using technology and AI with the same employee base. And so I think for small businesses, AI is going to be the big story. And so we're going to continue to see that growth. I think especially in construction, as the winter months kind of clear up and we start seeing better weather. And as interest rates improve, I think we'll see that as well. And as those tax refunds really start hitting, I think we'll see growth also in our hospitality areas.
Yeah, great point. Hospitality is going to get a benefit from services. You talk about construction. I would add electricians with that boom in construction. But Nancy, you just said a minute ago, 80% of jobs come from SMID. That's small and mid-cap companies. Tell us about that.
No, that's really an underappreciated story. What Wall Street follows are big companies, and big companies, some of them, to be sure, have been stopping hiring, even laying people off. But it really is, on balance, 80% of jobs are in companies with less than 500 employees, and Wall Street doesn't pay any attention to those companies. Economists have to, because for obvious reasons. And it really helps explain the bifurcation we saw in the economy, particularly 23, 24 into early 25, in that S&P earnings were going through the roof, but S&P 600 and NFIB earnings, small business earnings, were all deteriorating, which is why the labor market was indeed deteriorating. So that's one of the reasons why we are more optimistic on the labor market going forward. Again, the payroll employment report is one of the worst economic indicators we have, given the revisions, not just on a one-month basis, but going back on a year. The QCEW highlighted that last year. So net, I don't put a lot of emphasis on the payroll data. Net would be more optimistic, given the lagged effects of the Fed easing cycle and fiscal policy helping small and medium-sized businesses.
Nancy, we had a GDP of close to 5% in the fourth quarter. Do you still expect that kind of GDP growth for 26?
Well, we're using on average 3%. I keep saying with upside, and that given the oil situation right now, I would stick with the 3. But as we move through the year, there certainly is room for upside.
All right, great points. Nancy, thank you very much for joining the conversation for as long as you did. I know you have to jump at this time, and we appreciate your time. Mohamed El-Erian, it is all you. I want to talk with you now about these numbers. We haven't heard from you about your assessment. Also get into the fact that wages were also a factor in this report. Mohamed, your assessment.
So it is a big miss on the surface after the big beat of the previous months. But as I said earlier, be careful. There's lots and lots of noise in this report. The strikes, the weather, the revisions. I think the big point, if I may, Maria, is that, as you said, we are on the verge of yet another productivity boom. As you rightly said in your conversations with the IMF Managing Director, we are exceptional compared to other countries. Where I would add a note of caution, it's not automatic that this AI-led productivity boom is labor creating. It could be labor displacing. And this is why we have to be very, very focused on adoption policies. If we get the adoption policies, then we can have it all. We can have the productivity increase, we can have the employment, and therefore we will have a virtuous cycle. If we get the adoption wrong, then we see a decoupling of GDP growth from employment, and it makes the future more tricky. So I'm very optimistic, but we need more on the adoption policy for AI.
Yeah, absolutely. I've been asking President Trump, Treasury Secretary Scott Bessent, Kevin Hassett. I've been asking all of them repeatedly about the AI. What's the plan? And they have a plan, and they are talking about how the job creators are going to benefit from this great earnings and productivity backdrop and will create jobs. But I want to play what Kristalina told us, because don't forget, next month, we've got the IMF spring meetings, but we don't have to wait for the spring meetings. We know what Kristalina Georgieva is going to say with regard to jobs and productivity about the United States. She told us 2 weeks ago. Watch this.
The performance of the U.S. economy in 2025 was very strong, and in 26 we expect it to get even stronger. Growth last year in the U.S. 2.2%. This is half a percentage point higher than the rest of advanced economies. What is phenomenal about the United States is that strong growth is anchored in productivity growth. And in that sense, the U.S. is a positive outlier. Most of the rest of the world has been struggling to see productivity going up, but not the United States. In 2025, the hero was the American entrepreneur and the American worker, because of the dynamism they bring to the economy. We see the technological diffusion in the United States going much faster. Capital in the United States is not just abundant, but it is more willing to take risk than capital in the rest of the world. This cutting of red tape is also helping productivity to go up.
So we're going to hear more of that when the IMF has its spring meetings in April, mid-April. But Jerry Storch, let me come to you now. I want you to break this down for us. You're out there investing in retail. You're finding opportunities in retail after this incredibly esteemed resume that you've had, running Toys R Us, et cetera, et cetera. Where do you see the big opportunities in retail right now, and how do you assess the consumer today?
Again, I think the consumer is still fundamentally strong. The successful retailers continue to thrive. The numbers out of Walmart are fine. They're great, in fact. The numbers we got out of Costco yesterday were spectacular. Like a 6% same-store sales gain. That's economic prosperity time. That's remarkable numbers. If stocks are up or down a little bit, it's versus expectations, not versus what's really going on. So those are huge companies. So the big companies are doing great. There's absolutely no doubt about that. Small niche companies that have a differentiated competitive advantage are doing fine. You talk all the time about the companies that somehow come in there with a product people love and do well even against those large companies. So they're doing fine. Now, other companies aren't doing fine. Department stores were down 8% last month in the retail sales report, for example, the one that just came out. So we know that some sectors are struggling, but those are the ones that aren't innovating. If you innovate, you thrive. And you see that in all the numbers. So go ahead.
No. Tell me how they're innovating. What are they doing to innovate? And what's resonating most in terms of that innovation with customers?
It starts with something new. New products that are different from what everyone else has to offer. One of the biggest talks these days is how is Fiore doing so darn well, and Lululemon continues to struggle. And why? It's innovation, and it's using social media to market brilliantly. So there's always room for new people in retail. It has the lowest competitive advantage of any segment in the world. And so anyone can come in with a new idea and with the right approach to it. So you see it over and over and over again across every segment in retail. Meanwhile, the big guys continue to thrive. Again, Walmart, Target, Walmart, TJX, Costco, and Amazon. And they continue to gobble market share. If you looked at what percentage of the retail economy there are now, it would be flabbergasting. They've doubled their share in a short period of time. You go back over a decade. It's really remarkable what's going on. So retail continues to thrive. The consumer continues to spend. This whole K-shaped economy thing is a bunch of hooey. All people are talking about is different growth rates, not whether all segments are growing, because they're all growing. The K implies that one's declining. We've got to stop using that term because it's really, I believe, politically motivated to try to say, oh, these poor people, they're shrinking. They're not shrinking. They're growing faster than inflation. Their sales, their prosperity, their household net worth. It's just that they're not growing maybe as fast as someone who's been heavily invested in the stock market. So things look bright out there for the consumer. That's the bottom line.
Very good analysis. We appreciate that. So, Tomas Philipson, you've got to now ask the question, after all of that, why is the market selling off? The Dow Jones Industrial Average right now is down 550 points on top of a 780-point sell-off yesterday. Let me just point out that the United Arab Emirates is about to freeze Iran's financial assets. The move said to be retribution for the strikes. It would limit Iran's access to foreign currency. This is the Journal reporting this morning. The Wall Street Journal reports that the estimated value of Iranian-backed assets in the UAE, get this, is approximately $300 billion as of March 2026. Obviously, the war has something to do with this sell-off that we're seeing, because even with these numbers, this noisy January, the backdrop still feels good. Your reaction?
Yeah, no, I think that's exactly. It's the geopolitical stuff in Iran that's driving this clearly. I mean, we saw sort of a safe haven trade is usually what we see when we have geopolitical risk coming up. That's what we saw with Russia and Ukraine, where stocks go down, but yields go down, or bond prices go up as well. But here we're seeing the opposite, obviously. We have basically both stocks and bonds coming down. because of the inflationary effect of the oil prices. I mean, yields are up about 15 to 20 basis points, which is quite dramatic since Iran started. So I think this is really about Iran as opposed to potentially being all about the jobs report.
Yeah, it's a great point. And Cheryl, you've got to also counter in the fact that we had a horrible winter. Okay, the February storms cost a lot of issues. People did not want to leave. Maybe look at that for the retail sales. But even in January, you know, it was messy. As you heard from Jerry, it's always messy. It's the month after the holidays, people returning stuff, et cetera, et cetera. What else do you look at this morning, Cheryl, that's informing?
Well, the retail sales number that we got crossing along with the jobs report, I thought was very informative. Look, 3.2% annual retail sales year over year, not adjusted inflation, but that is a strong number. You know, the unemployment rate, it's, you know, a little bit higher than it was over the last year, but historically, the unemployment rate in this country is at a very low level. And also, to your point about the weather, that was a factor in this report along with the strike in healthcare. And that was at the top of the government's list this morning when they released the report. It was the third line in that report. You know, they highlight this because they want to make sure that that matters. The other thing that I wanted to just highlight again, and this is the AI story you've been talking about so much, is a lot of these small businesses, which is the engine of hiring in this nation, a lot of these small businesses, according to analysis, are actually going to benefit from AI. You might see some job reductions at larger corporations because of AI efficiencies, but not when it comes to small businesses, because AI is a tool for efficiency. When you've got Walmart saying, okay, we're going to have AI that's going to take some jobs out of the back room, but we're going to hire for the front of the store, that is important information. Listen to these companies, listen to these CEOs when they tell you how they are using technology and what they are saying as far as the consumer. And by the way, Jerry, thank you for mentioning Costco. That was an incredible report. These really do show you that the U.S. economy, despite what you may hear in mainstream media, the U.S. economy is strong, and the consumer and corporate leaders are telling us that it is. As for the war backdrop right now, short-term problem. What you see trading today is not what I think you're going to see trading in 4 weeks from now.
Yes, for sure. I agree with all of that sentiment. We just have to keep a watch on oil because oil prices can cut into things. And I want to talk about that for a moment because the president has a lot of options in terms of reining in these prices. He's already tried to fix the issue in the Strait of Hormuz. We will need more security there. And of course, we are going to need to see these tankers not be afraid to go and travel through the Strait of Hormuz, where 20% of global oil is transported every day. But you also have the Strategic Petroleum Reserve. If oil gets out of control, I would bet the president taps into that SPR to put more oil on the market. Mohammed, how worried are you about oil? We know that this is an obvious impact from the war, and it will reverse course. Question is when.
Yeah, I am worried for the reasons everybody has discussed, which is it's a headwind. The good news, and you see this in the numbers already, Maria, that not only does the U.S. economy play offense better than elsewhere, we also play defense better than elsewhere. We have more policy flexibility. You just mentioned the strategic reserves. Also, just look at what has happened in the bond market. Tomas was right in saying that our 10-year yields have moved by about 15 basis points recently. In the UK, they've moved 3 times as much. So what I think you're going to see is us not only dominating the offense, but dominating the defense. My hope is that we don't have to play defense too long, because all this adds pressure on the consumer. It is about higher gas prices, it's about higher mortgage rates, and it is about supply chain disruptions that are going to push inflation higher. So the hope is that this passes quickly, because you don't want to reach any tipping point internally.
Well, you know, it doesn't help with the energy minister of Qatar coming up with this dire warning this morning. That's why oil has spiked. It's up another 8% right now because the Qatari energy minister told the Financial Times, it's in the FT this morning, that the Gulf conflict could could trigger a global economic shock, warning that continued fighting will force all energy exporters to halt output and could send Brent crude prices north of $150 a barrel. I find that highly skeptical. But Alfredo Ortiz, there are also job stories around this, because when you look at the oil infrastructure, you're talking about high-paying jobs. Again, I ask you for sectors. You said construction. What else is important to you in this jobs number, Alfredo? And talk to us about the jobs.
Yeah, exactly. You know, and again, we've been talking a lot about AI. I know Cheryl hit it right on the nose there in terms of the productivity for small businesses. We are going to continue to see small businesses really leverage AI to be able to do more with what they've got. And again, I use the example of Control Point Associates, a land surveying company in New Jersey, where they've been able to double their revenues in one office with the same number of employees in 2 years. That was due to AI and technology. So we're going to continue to see that. And I think we're going to start seeing where remember, 2/3 of new job growth is in the hands of small businesses. And so as they really adopt and adapt to AI and technology, we're going to continue to see that growth. I think the oil and mining is going to be huge. I think energy infrastructure around data centers in certain states, even for example, in Georgia and Florida, those are going to be huge areas of construction growth. And so I think that's going to be an exciting opportunity. And I love what the president did with energy and AI companies, where they were actually basically going to be flipping the bill for the cost of the energy construction. So that's going to be passed on. And as far as the what's going on with Iran, remember that we just did a deal with Venezuela as well. And I think we have that entire open market there from oil that we can access through Venezuela as well. So I think it's going to be a quick war, hopefully, and the consumer will move beyond, and the energy and the gasoline prices will come back down. It's a shame that they've actually already gone up about 30 cents in just a week. That's pretty unnecessary. And so, unfortunately, they're taking, I think, some profit taking there unnecessarily. So, but we should see that come down and the consumer feeling good about things again.
Well, you mentioned the right move, because oil and Brent are up about 25+% just since this war began. But I think we also have to zero in on the president's agenda. What is his agenda? Tapping into the oil capacity of the United States, getting jobs back to America and supply chains back to America. So, Alfredo, you just hit on it. Mining companies, mining jobs, oil jobs. Why? Because the president has used tariffs in an effective way to get companies to bring their supply chains back to America. But on the issue of tariffs, I have to point this out, Tomas, because this refund issue is like ping pong. Right? I mean, the U.S. government may owe $700 million in interest payments per month on that $134 billion in refund obligations that the courts are saying you got to pay that money back, all at a time when Treasury Secretary Bessent told us that the 10% global tariff is going to 15% probably this week or next.
Yeah, out is the tariff dividend, which was going to go to people who didn't pay the tax, essentially. Now we're just focused on the people paying the tax getting potentially paid back. That's going to play itself out in the courts. It's probably going to take a very, very long time. But coming back to the oil markets, I think it's very, very important that we don't have this Biden policy where we restrict supply, which is really very important when the rest of the world does it.
Well, that's right. And that's why I keep pointing out, if the president wants, he can tap into the Strategic Petroleum Reserve right now and get more oil on the market from the SPR. He bought oil at cheap prices. This has been a phenomenal conversation, everybody. Thank you. Have a fantastic weekend. Mohamed El-Arian, Alfredo Ortiz, Jerry Storch, Tomas Philipson, and Cheryl Casoni. Thank you so much. By the way, good news for you. We survived that incredible winter. You're going to be turning your clocks forward this Sunday. Yes, it is spring forward, daylight savings time this Saturday night. Don't forget to do it. Spring forward with daylight savings time. Have a great weekend, everybody. Thank you so much for being here. Morning Company picks it up now.